Sydney is the second most expensive housing market next to Hong Kong. The median house price to median income is 15x. So, on equivalent terms, a single bedroom apartment in a shitty part of Sydney will cost you about 800,000 Aussie, which is like 560 or 650,000 US, something in that ballpark. So that's for a single bedroom apartment with probably not even a car spot. So it's a real problem. It's a mess. It's way more expensive than the most expensive areas of San Francisco and all that. More expensive than New York. So it's a crazy, crazy housing market. And most people my age are looking at going, I'm just giving up. I can never buy it. Why do I care? Why do I bother? Right? And they go out and they just spend their money on holidays, which I get it. Fair enough. The housing market, I haven't checked this for a little while, but I've got a chart on my site. If I look at the Australian housing market since 2020, because I think for a lot of people, 2020 is our benchmark. That's when the big print happened and they, spit out all this money and inflation came rampant. So priced in 2020 dollars, the Australian housing market is up like 65% on average in Aussie dollars. It is down 89 or 95. I think it's actually more than that, 95% in Bitcoin terms. So the Bitcoin that I held in 2020, I can now buy 20 times more house with that Bitcoin. So suddenly, I'm not too concerned about the price of the housing market because it is moving lower and lower and lower in the asset that I benchmark to. So my ability to buy a house has dramatically improved. And in fact, it would be impossible. I'm still not there yet. That's kind of how crazy this market actually is. It would be impossible. I don't understand how anybody my age has even a sliver of hope. And then what's worse, we were talking about leverage before. The amount of people that I know who are levering themselves to the gills, right? Our government's just brought out a 5% down. So people are going 20x long the bulletproof Australian housing market at a time when interest rates are drifting higher. There's all sorts of reasons why this is the worst possible time to be going max long this particular asset class. And yet this is what people feel the most safe on. It is the bulletproof market. Now, the government will kick the can. That's one thing that the housing market does have, is that the government will do everything in their power to keep the Ponzi scheme going. But every Ponzi scheme comes to an end at some point. So I'm not really predicting the end of the Australian housing market. All I'm saying is it doesn't really matter to me because I denominate in an asset that is kicking the housing market's ass, and that's a bloody hard thing to do.
Absolutely incredible. That's an amazing story just to amplify, magnify what's going on. And like you said, really
it's solving a real world problem for me. So Bitcoin say, what's Bitcoin used for? It's like, I don't know, maybe fixing the number one problem in Australia.
Jeez. It's incredible. And it's a great segue to, price and talking as we start to land the plane here and, what you're seeing this cycle and what you're seeing, like, I guess even the 10-year gold rush as Michael Saylor calls it, right? So kind of like the short-term and then long-term horizon and even beyond that. And so the segue to this, I think, is, like you said, saving in this asset that's really just destroying everything else. And there was, it was, can I get to 10 Bitcoin or 100 Bitcoin years ago? And then it was, American HODL's 6.15 Bitcoin is the meme for those, if on Twitter. Now it's, get to 1 Bitcoin, and now it's probably get to 0.1 Bitcoin or 0.01 Bitcoin. There's a lot of social media surrounding that. But again, we're human. So that's what gets people to actually watch a lot of the videos. That's why we see so much of it surrounding those topics. But in reality, what should people be aiming for? And the average guy, the average gal right now, a normal investor, just dollar cost averaging, confused by price, confused by maybe half of what we're talking about here today. We're doing our best to bring it down to a 4th grade reading level, like most of us read at, us 80 IQ plebs. But what should the average person be really aiming for and stacking for as they go forward? Can they, or will they be able to retire, like you said, a millennial or a Gen Z, 10 years, 20 years, or even someone, we have a lot of people that are 40s, 50s, 60s watching the show. Will they be able to retire in 10 years? So I'd love you to kind of unpack what you're seeing, what some of those goals should be, and we'll kind of flow from there.
There's 21 million points in the world, and your job is to store your money in, store your wealth and your time, and acquire as many of those points as you can. You're not trying to buy it to, put yourself in a box and stress over getting as many as you can. It is just a fantastic savings vehicle. That's it. That's all it is. And look, I've spent a lot of time, I spend a lot of time with deep, dark data and trading models and, algorithmic stuff and all that. You can spend a fortune and countless hours trying to design a model that might get you 5 or 6% more than just daily DCA. Honestly, daily DCA is one of the hardest strategies to beat in Bitcoin. It is so impossible, right? And at best, some of the best trading algorithms, you're getting up like 5-6%. And even then, you need to put leverage on to really juice those returns.
Wow.
The vast majority of people would benefit from literally just daily DCA. That's actually what we do with our company. With our company, because I spend my whole time analyzing the Bitcoin market. I will, thus far this cycle, I think the on-chain data has been quite effective at spotting like really good buying opportunities, points in time where the narrative is it's all over, and I'm basically looking at going, it could be, probably not. Actually, probably a good time to jump in. So far, it's actually been very effective at spotting those like very timely, like, if you were to light it up on the chart, be like, wow, you managed to buy there. Even if you do that, right, you save up all your DCA and you time it perfectly, you might beat your daily DCA by like, 5-6%. Well done. That's still good, but the vast majority of people would benefit from just consistency. Consistency is so much more important because you're getting the full average price of the market. So for us as a business, because I've got 10,000 other things to deal with, we actually just have a daily DCA. It just ticks away in the background. When we get those big events where it's like, okay, this looks like a bottom, we will lump sum a big chunk as well. So we've kind of got that that's our general strategy, but we are buying literally every single day because it is the best way to just get the perfect average return. And the average return for Bitcoin is tremendous. It's better than pretty much anything else you can find. And there will be things that come and go. There'll be treasury companies that moon and doom. They will come and go, but Bitcoin is that one constant that's just going to keep doing very well. And in a bear market, which will come eventually, that is where you actually want to leave your daily DCA on the most because you are going to be buying more coin the lower that the price goes. What actually happens, the reason why daily DCA is so hard to beat is when you're stacking away, right? You're in a consolidation range or a bear market, you're stacking away, then the price usually just rips. And the Bitcoin market only goes up very, very rarely. Most of the time, Bitcoin goes sideways. 40% of the time on a daily basis, it literally doesn't go plus or minus 1% either direction. That's actually the statistics. 30% of the time it goes up 1% or more. 30% of the time it goes down 1% or more. On a quarterly basis, most quarters, it goes nowhere. But then you get the occasional quarter where it's plus 100% or plus 70% or plus 50%. And if you are not there for that plus 100%, you miss it. If I've taken the last 3 market cycles, so 2017, 2021, and this cycle, and I removed the 10 best days, just made them a 0, and I removed the 10 worst days. And this is pretending that you're like the perfect trader. You only buy the day before it rips, or you sell right before the biggest red, and then you buy back in. If you are that impossibly ridiculous trader, if you miss the 10 best days, you are either flat on the whole cycle or you're down. So you actually lose money if you're not there for those 10 days. If you miss the 10 worst days, which is what a lot of people are trying to do when they say, I'm going to sell here and buy back later. When you miss the 10 worst days, your return goes from like plus 500% to plus 600 or plus 800%. Yeah, sure. You did better. You're plus 800, but you might sacrifice the plus 500 and get a 0 by just trying to time the market. Just be in it all the time. Just be in it all the time. That is literally the secret sauce of Bitcoin. Hodling is simple. It is not easy. At the end of the day, that's why I write the newsletter. A lot of people are like, oh, but do you write for traders? No. Actually, my target audience is hodlers, people who are just buy and hold. But the reason why is they all have 95% of their wealth in this thing, and they want to watch the basket very carefully. Because when you understand what the basket is doing, it makes it so much easier to hodl. Because you're like, I don't care that it's up. I don't care that it's down. I thought about it going down and up, both directions, long before it happens. So when it happens, you're not surprised. I don't want any of my subscribers ever to feel like a deer in the headlights, where the market suddenly rips to the upside and they go, oh shit, is this the top? And I also don't want them to sell off and then be like, oh my God, is it all over? Is it a bear market? I want to be like, yeah, I was expecting that. Now I know what to do. I'm going to step into the market, or I'm going to step back, or whatever it is. So that's really the most important thing. If you are new to Bitcoin, just buy and hold, daily DCA. It is such an unbeatable strategy. Just be there for those 10 days. Don't worry about the 10 bad days. They get more than consumed by those 10 good days. But you've got to remember, 10 days out of a 4-year cycle, you don't know when they're going to happen, but they're not common. They just sometimes just explode out of nowhere. And if you're buying after that day, because you're like, oh, I was going to buy, I didn't realize it was going to go up, you've missed it. Now you're going to get a zero.
Yeah. It's such a great play. You don't play roulette, right? You got whatever that is, 1,000 days or whatever that is, the 4-year cycle, and you got 10 days. You got to hit the, whack the mole somehow. Good luck. You're playing roulette. You're better off doing that. All right, I want to walk through. So again, the average person watching this, is like, okay, where's going long term? So I want to back this 3-parter from like long term. I have a long-term question for you here, and then like the 10-year gold rush, that segment, and then what are we looking at this next year, like this bull cycle? What does it look like to you? So the first question is, what's the total addressable market of Bitcoin? Like where is this thing going? Because I know there's still a lot of people that are, like you said, the newsletter is there to deepen conviction of hodlers, but there's also a lot of people who are just learning this asset class. So I'd love for you to unpack your thought for a minute on, are you more of a Jack Mallers type of guy? Hey, it's 1/2 of every transaction that's Bitcoin. It's 450 trillion is the addressable market. Or are you maybe more of a Jeff Booth guy who's, hey, it's 900 trillion. It's going to account for all assets on earth, or maybe, some variation in there. So I'd love for you to kind of unpack where things can go and where they will go on a long enough time horizon.
I am some magnitude less bullish than those two. Not because I don't think it can't happen, but I just think it's Bitcoin being 1/2 of every trade or all total wealth, I think is just such a nonsensical. It's the asteroid hitting the Earth. Am I going to factor that into my model? No. The way I like to look at things, it might have been Preston Pish actually in Seoul. He was basically saying, and as an engineer myself, I fully understand this. He goes, basically the way that you design things is you put the most conservative estimates you can. You bring everything down, and then you say, if it works under these super conservative levels and I'm happy with it, then everything above that is just bonus. That's just gravy. So for me, it's very simple. Bitcoin is just better than gold. It's just exponentially better than gold. And if you want to have an exercise to do this, get a $5,000 or whatever. I think it's 5,000 Aussie, $3,500 worth of silver coins. Get $3,500 worth of silver coins. Put them on your desk. It's a heavy, chunky piece of metal. Right? It's a big thing. Then you get a single gold coin, right? It's this big. And then you put $1 billion worth of Bitcoin on your table. Where is it? Oh, and by the way, I can zip it from my vault to your vault to that guy's vault. You can move it around the internet. It's just better. It's better gold. So for me, what is the initial price target for Bitcoin? Let's just get to gold parity first. So that's not in dollars. That's 10.8 kilograms of gold per Bitcoin, which right now is like $1.2 million. So that's my initial price target. Let's not worry about being 1/2 of every trade. Let's not worry about being 500 trillion bazillion dollars. Let's just get to 20 trillion first. Let's start at 20 trillion. Once we get to gold's market cap, because this is the other thing. Once you get to 10% of gold's market where we are now, people are already eyeballing and saying, well, if you can get to 10, can you get to 20? And if you can get to 20, 50's next, and once you're 50, let's fucking go, right? Let's go to 1. So like that move, that is enough. And that's my conservative engineering design. Do I believe that we can get to gold's market cap? Yes, I do. If we go above that, I'm happy as Larry. How could you possibly be mad with that? I'm not even going to pretend to estimate what the world looks like that far ahead. Who knows? Complete variable. What I'm very confident of is that fiat is not going anywhere anytime soon, because 97% of people, we keep going back to this number, 97% of people and 100% of governments do not want fiat to go anywhere. And you know this because look at the hyperinflation that can happen elsewhere in the world and how much pain people will take, and they still won't buy Bitcoin. Yes, it saves some. Saves, I would say, wager, about 3% of people it saves. The other 97%, they don't want to change. Change is way scarier. So they will just take the beatings until it gets worse and worse and worse. So yes, I think it's very exciting to say that Bitcoin will be one half of every trade. It's very exciting to say it'll be more than all global wealth. I'm quite happy with just getting to gold's market cap. Let's start there.
So
people call me a bear, and that's like a 10x.
Hey, you're an engineer. I mean, you can't,
I'm happy with a 10x. Let's start there, because once you get to a 10x, once you're at 100% of gold, with like, what about 200? What about 500? So that's where that comes from.
Well, and engineers have to operate in the real world, right? So
Correct.
let's operate in this real world. Let's take what we got and go from there.
If you like that clip, then you definitely got to check out this next spicy clip. I think you're really going to like it. Come on, check it out. But if you want the full version, the full interview, then check that out over here. Come on, do it. I'll see you in there.